Hi, I'm Jasmine, the Creator's Tax Strategist. Managing cash flow can be one of the toughest things to do as an entrepreneur and self-employed individual. In today's video, I'm going to give you some practical tips on how you can manage the cash flow in your business stress-free. The top 3 things I would say that you need to do to effectively manage cash flow in your business is to have a income and expense tracker. Whether you use something like QuickBooks and have it help you automate your bookkeeping and accounting, or whether you like to go the old-fashioned way and maintain a spreadsheet, you've got to know your numbers and have corresponding financials. That's the first step to being able to manage your cash flow, because you got to have an understanding of what's coming in and what's going out in the first place. The second thing is that you absolutely want to be setting aside money for taxes right from the get-go when you earn the revenue that you know is going to be taxed, because now it's in the profit margin of your business. So if you make $10,000 and spend 7 of that on tools and resources and employees, you have $3,000 left that you're gonna have to pay taxes on that money. If I were you, I would immediately take 30% of that $3,000 that you expect to be the profit of your business thus far and put that in a savings account for tax time, where you have to pay taxes every quarter as a self-employed individual. And finally, you need to have a budget. Creating a budget ties into number 1, where I suggested you need to have financials and to have bookkeeping and accounting of your business. A budget is a little bit different. A budget lays out categories of expenses that you have every month, whether the expense has already occurred or not. So you might know that your employee expense is $2,000 a month, and in your budget, create a line item for $2,000 a month of an employee expense. However, having the overall budget in itself will tell you how much you expect and anticipate to spend in each of the areas of your budget, which should include things like fun, savings, clothes, all the other things that you want to set aside money for, regardless of whether the transactions are already happening in your bank statements or not, which would be what your financial statements show, the activity that's already happened in your bank account. So remember, managing cash flow in your business comes down to 1, knowing your numbers and having financial documents. Number 2, setting aside enough money for taxes so that you're not operating out of money that's not yours because it was intended to be sent to the IRS already on a quarterly basis. And 3, have a budget so you understand how much money you actually need for the operating expenses or discretionary expenses that you have and you need to set aside money for. If you're my client, you know that I like to be extra thorough in my explanations. So here, I'm gonna tell you 2 more things that I want you to know about cash flow management that I didn't already say in my top 3 tips. So those 2 additional things we've got to talk about are an emergency fund and your invoicing, your payment and cash collection systems. So as it relates to your emergency fund, it's really important for you to have an emergency fund as it relates to managing your cash flow, because when you've established an emergency fund, when an emergency comes up, whether it's a small emergency like having to get 1 new tire, or whether it's a big emergency and having to get 4 new tires, you've already established an emergency fund that will take into consideration some of that money that's popping up necessary as an emergency. In this case, because you have that money set aside, you're not having to put extra debt on a credit card or having to figure out how you can move money out of your business account and into your checking account, or if you even have enough money to pay for it out of your business account. Of course, if it's a legitimate business expense. The point is, having an emergency fund allows you to know how much money you need to keep in case of an emergency. And the rest of it, you don't have to keep super accessible to you. You can either invest it in a 401k or in an HSA or in a Roth, or even just simply in a high yield savings account. So you're at least earning some money on that money that's sitting there beyond your emergency fund. Now, regarding invoicing and payments, managing your cash flow obviously requires cash flow. So you want to make sure that as it relates to your invoicing and payment systems with your clients and customers, in respect to content creators, the sponsorships that you're receiving from different companies, or the streaming income that you're earning. You want to make sure that all of these things are positioned to deposit into your bank account as timely as possible, so that you have your money in your possession longer than the person who needs to be giving you that money has it in their possession. In this case, you're able to turn your cash flow faster, at a faster, more effective rate, because you have your money in possession longer than not. You can pay your credit card payments sooner, so that they're subject to less interest if interest does apply. And you can also pay your people out sooner and invest the money if it's money that's to be invested. Regardless, managing the influx of cash flow into your business really is the premise of managing cash flow. Again, since you need cash to be able to manage cash flow. If you like this video and you are gaining value from the knowledge that I have to share, I'd love for you to subscribe, comment, and like this video.